Now we're talking. Back in the action here once again. It's about that time of day again here, folks. It's Thursday afternoon. It's October the 3rd, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, guys, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning at the opening bell. But my job's a little bit different tonight. My job tonight is to help you guys find the best levels of support and resistance, the best entry and exit points for tomorrow, and most importantly, the most common traps to avoid on tomorrow. That's Friday's trading session, and we'll get a lot to cover in tonight's video. We're going to make up for lost time this week here. I always hate being away from you guys that long, right? I'll talk about that in a moment, though. Got a lot to cover tonight, though. Oil, S&P, Nasdaq, and gold on the video tonight. I'm going to jump in here first on that black gold, that Texas tea, that crude oil futures, because what starts off as a range usually ends as a range. Got a big old pendulum swing now with some big news tomorrow on oil. Let's grab that oil chart here to kickstart this session here tonight. Boy, oh boy, it feels great to be back here with you guys and gals here this evening. Looking at the oil here tonight, we know, of course, the most important piece of the puzzle on oil right now is that trading range. Market started off this morning inside of that range. We saw the 10 o'clock news, that non-manufacturing number come out, and of course now we're running back up into that range. The range is the most important thing right now on oil. The bulls have all the momentum here on the way back up into that range. The problem is I don't want to be trading inside the range. I want to be buying below the range, right? Buying at a level of support. I've got a great area of support I'm watching for down around that 52. I'm looking for some buy setups here towards the low of that bull channel, down with some traps around that 51.85, 51.76. If we don't get it, if we don't get that pullback, I gotta be careful inside the no trade zone, and we'll talk about some scenarios if this market runs higher, because I've got three different scenarios to keep in mind if we keep running higher here tomorrow on the oil. We got some big news tomorrow morning coming out of the White House that definitely applies to crude oil. We'll talk about that tonight on the video, and obviously we'll break down all of my favorite entry setups looking to buy that low on crude oil for tomorrow. How about some S&P here tonight? S&P is bullish with a capital bullish right now. Very strong response here. What's the most important clue, though, on this chart right now? It is that trading range, right? The amount of the move below the range is oftentimes the amount of the move above the range. I've got my eyes on that 29.20 area. We know we're bullish. I want to be a buyer. Do we get a pullback into that battle zone? We'll talk about three different buy patterns to watch for on that pullback, or do we try to keep going higher? If we go higher, we've got to worry about those levels of resistance overhead, and we'll put together a plan of attack for the price going higher here tonight on that video. So make sure you stay tuned. If you're an S&P trader tonight, we'll talk about the S&P. How about the Nasdaq? Nasdaq, nice big strong run back higher here. Most important clue right now is we've got this trading range. You'll notice the Nasdaq, of course, has finished off their pendulum swing, so they're right up around major levels of resistance. That's the most important clue on this chart. We know we're bullish, but we're running out of open space. Whenever we run out of open space, that tells me one very specific pattern to look for tomorrow. I want to buy a pullback right now. I want to buy at support. I've got a great level of support I'm waiting for down around that 76.19, 76 and change down there. I'm also waiting to see if we'll get this move going higher here as well, because you know those buyers, they got their eyes on that retest of yesterday's high. So we'll talk about if we get the pullback. We'll talk about if this market keeps running higher. We'll cover all my favorite setups on the Nasdaq here for tomorrow. We'll even talk about what to look for a sell back down into that trading range. Stay tuned for the Nasdaq here. And wrapping up tonight on the gold right now, most important thing on gold at this point is that trading range. That trading range, we were up bullish into a range here this morning. News comes out that shoots the market higher. but look what's happening. Buyers try once, buyers try twice. It looks like the odds are pretty good. We're going to go back into that range. I'd like to be a seller, though, before we get back into that range. I'd like to be a seller up inside that battle zone. We'll talk about the specific entry pattern. I want to sell off that battle zone. And then what if it collapses back down into that trading range? I have a ton of support levels waiting down here, right? Do we get a short-term pullback? Do we get a deep pullback? Do we really pull back? Each of those three pullback areas will have different types of what? Momentum. And momentum will determine which type of entry pattern we want to use for tomorrow's trading session. Will they get the pendulum swing all the way back down, or will they get stuck inside that trading range? I'm anticipating the market going back down to that 1500 at some point. Will we be able to sell it up in that battle zone, or do we have to wait to buy it a little bit later on in tomorrow morning's trading session? Guys, we're going to cover all of these details, all my favorite entry patterns on the gold. I've got some gold, I've got Nasdaq, I've got the S&P, and I've got the oil on tonight's video newsletter. Before we jump into the charts, though, and put the entire strategy together for tomorrow's Finally Friday non-farm payroll session, I just want to remind you guys to make sure you never miss another great newsletter. And to make sure you never miss a video, make sure you join our mailing list. Joining our mailing list is super easy. Just head over to the website or the blog here at Sideways Markets. All I need is your name and your email address. Hit that subscribe now button and I'll add you to our mailing list. Now don't forget, when you hit that subscribe button there, your job is not over yet. You still got to go in and check your email inbox, because I'm going to send you a welcome email with a verification link and a bunch of great free resources. So check out the mailing list, get on that mailing list. That way you never miss another great video. And then don't forget, check that email inbox for that welcome email. Click on that verification link. And keep in mind, guys, sometimes that email gets stuck in your spam filter. If you don't see the welcome email, check your spam, check your inbox, check your junk mail, and make sure you whitelist us here at School of Trade so you always get that email and you know exactly when this newsletter goes live. How about questions here tonight? I'm always down in the comment section below. If you have any questions about anything we talk about tonight on the video, drop those questions in the comment section below. I'm always hanging out down in the comment section. So if you have any questions about the charts, the setups, anything we talk about in tonight's video, drop those questions in the comment section below. And guys, while you're down there typing those questions in, if you tune in every evening and you love this video newsletter, hit that thumbs up button for me, will ya? Because believe it or not, every time you hit that thumbs up button, YouTube helps to reward me, right? Or expose this video to other traders, right, who really would love to learn this strategy as well. So hit that thumbs up button, help me expose this video to more new traders. That way more people can learn this very great three-step strategy. So post those comments below, hit that thumbs up button, and don't forget, if the comment section isn't quite for you, don't be afraid to call that toll-free phone number in the upper right-hand corner. I'm always standing by here in the office to answer your call, answer all your questions. So call that toll-free phone number, use that live support tool if you ever have any questions along the way. In the meantime, though, let's get this party rolling here, right? Got to make up for lost time. And real quick, guys, I do apologize for being out and MIA here earlier this week. I went to Chicago, had a great time at a wedding for a client of mine, right, in Chicago over the weekend. But unfortunately, I brought a little bit more than some tourist, right, stuff back with me. I brought a nasty head cold back with me from Chicago, and it just ran me over here this week. We did have a very, very productive week in the morning session trade room with all of our clients, but as you can probably hear, my voice is barely holding on here right now. So in the essence of trying to preserve that voice, I tried to let myself rest up here this week. But I'll tell you right now, I hated being away from you guys. I love doing this newsletter every evening, and of course getting us ready for tomorrow's Friday's trading session. So we're back to our normal schedule, right? Monday, Tuesday, Wednesday, Thursday evening for our newsletters, right? And I really appreciate you sitting tight there and staying patient with me. And I got so many great emails from you guys over the week, right? So thank you so much for thinking of me while I was out there on the mend. But getting ready for tomorrow's trading session. Tomorrow is all about one major news event tomorrow, and that is that employment number. at 8:30 Eastern time. Tomorrow is the first Friday of every 1 month, right? The first Friday of the month is that Employment Friday, right? Or Non-Farm Friday. Now, it's important that you keep this in mind. Non-Farm Friday has the potential to be a very big moving day. It also has the potential to be a very grindy, nasty, narrow, range-bound, pick your pockets and send you home in the red type of day too. So you really got to be careful tomorrow to really wait and see what this market, right, is going to give us. Now, keep in mind, throughout the week this week, between the impeachment stuff and the Brexit stuff and the recession stuff, the markets have been not all over the place, but we've seen some very big moves down, right, on these, right, in most of these markets, or up, right, if you're trading on gold here, right? So we've seen some very big moves this week. We may not be able to get one of those big roaring days tomorrow, but I'll tell you, a possible short covering rally, another leg lower, is definitely possible. So the moral of the story is tomorrow morning, don't force it. Non-Farm Payroll Friday, what you want to remember is around that number, right? The number comes out at 8:30 Eastern time. If the number comes out as expected, the market will tend to chop around sideways and you've got to wait patiently. If the number comes out outside of expectations tomorrow morning, we usually get a very, very violent, volatile response. And because of that violence, because of that volatility that comes into the market, you want to give the time, right? Give it some time to let the dust settle. So bottom line is, no matter whether we come within expectations or outside of expectations tomorrow, you need to give the markets you're trading some time to let that dust settle. It's usually either a very strong reaction or a very disappointing reaction. Don't force, right? Don't force the market if it doesn't move a lot around that number tomorrow. Give it some time, wait for it to find its direction or find its range, and then once we know what the market wants to do, we can formulate a plan, right, and do it together tomorrow morning in our trade room. So again, just be careful on that tomorrow morning. Now, how about the overnight session? The overnight session on these employment numbers are usually pretty choppy and pretty low volume. Now, I will say the last couple non-farm payrolls, and again, every first Friday of the month, right, the last couple non-farm Fridays, the markets have been pretty good overnight. So we're thinking about gold, right, the E-minis, and the oil. So I'm not going to say you don't want to trade overnight, but I will tell you right now, if you don't know what good, consistent price action looks like, I would be careful overnight. Don't force trades overnight on gold. A lot of times gold can be a very, very challenging market leading into that non-farm payroll number. So don't force it overnight. If it's moving, if it's consistent, then you can trade the overnight session, London, right, or Asia into London before we go into it. But again, a lot of times these employment numbers, the lead up into it can be very quiet, very low volume, and very grindy. So don't force it. Much better to wait until after the number comes out tomorrow morning at 8:30. Wait for the dust to settle. And of course, right, trade we see after that news comes out. So again, you can trade overnight, Asia and the London session, but be careful. Don't force it if it's not moving well. And as always, guys, tomorrow morning we'll be in our trade room like we are every morning, 8 o'clock Eastern time, and we're going to watch that news number come out. We'll let the dust settle. We'll update our charts, right? And we'll trade the strategy together. So tomorrow, careful. Don't force it, right? That's the most important thing I can caution you for tomorrow is do not force it. Now, we also have Jerome Powell speaking tomorrow afternoon, along with quite a few Fed speakers, right, later on in the day. So, normally I would say early in, early out on a Friday, right? You've got to have a really good reason to be trading on a Friday afternoon. My cutoff on Friday mornings is just after 11 o'clock Eastern time. And really, since tomorrow's a non-farm Friday, it's always difficult to tell how much we'll actually get. But we do have Jerome Powell. We got Brainerd, right? We got Quarles speaking in the afternoon. Esther George on Sunday, apparently, right? So we may see some movement in the afternoon. Again, though, just like I said before, if it's not moving, don't force it. You want consistent price action, right? Consistent flow on those charts tomorrow before and after that news. And another thing too, if this is your first Non-Farm Friday, be very careful. Make sure you get with somebody who can help you navigate through some of this stuff, because this is one of the biggest news events that we get every month, right? The first Friday of every month. So we know we've got that employment number tomorrow morning at 8:30 Eastern time. What else is going on? Well, we get the non-farm number. We're also expected to hear a biofuels. I'm not sure what they're going to be talking about here tomorrow, but tomorrow morning out of the White House, we're being told right now that we will likely see some sort of announcement tomorrow regarding biofuels, which I would imagine is going to impact the price of oil. I'll keep you guys updated tomorrow morning in the trade room on this. I don't know exactly when that will be announced. I would imagine it'll probably be after 10 o'clock Eastern time. Let that employment number come out, get to the opening bell, and then I would imagine we'll then hear about the biofuels. But right now, they're not telling us any specific time on that. I'll have my news feed right, locked and loaded tomorrow morning, and we'll keep our eyes open on that in the trade room. Impeachment, right? This impeachment inquiry, getting everybody all fluffed up here this week, right? That will definitely be on our radar tomorrow. And then, hey, there's still back and forth on Brexit right now, too. So Brexit, right, we're keeping an eye on headlines for Brexit. We're watching the headlines on the impeachment drama right now, the biofuels announcement tomorrow, and, of course, that non-farm payroll number. The only thing that we know for tomorrow is that employment number, right? That's all we actually know at 8:30. Everything else is kind of a wait and see that we're watching tomorrow morning. And again, tomorrow morning, 8 o'clock Eastern time, we'll see you guys there with me in the trade room. So now we know the basic schedule for tomorrow, early in, early out, big news at 8:30. Let's put some charts together here tonight, and let's get this party ready for tomorrow's trading session. We got some oil, we got some S&P, the Nasdaq, and of course the gold tonight on that video newsletter. Let's start off now first with that black gold, that Texas tea. Most important clue right now on this oil is the market spent really the last kind of day and a half inside of that trading range. We saw that non-manufacturing, that ISM non-manufacturing number that came out today, ran all the way down, got there, not quadruple, but quintuple measured move down. And then notice, right, we got that 1, 2, 3 reversal off of that low. And buyers, as you can see, was waiting, right, to buy that pullback, right? Hard to believe this market's gone 5 legs down here, right? Since what? Since the end of the month, right? 1 leg, 2 leg, 3 leg, 4 leg, 5 legs down. Now, 5 legs down doesn't mean it's guaranteed to reverse, but I'll tell you, when you see a market go 5 legs down like it did on oil, you have to think there'll probably be some profit taking. There'll probably be a short covering rally here that we can profit from. So I'm looking at this as a range-bound market. That's kind of the big clue right now. That trading range, right, is a magnet. Range-bound markets tell us to buy low, sell high, and avoid the middle. Range-bound markets tell us to buy low, they tell us to sell high, and they tell us to avoid that middle. Range-bound markets also tell us that the amount of the move underneath that range will likely be the amount of the move back above that range. You'll notice that pendulum swing puts us almost all the way back up to that big gap there. Remember that gap area there from 54, 58? That was the drone attack low, right, from earlier on in the month of September, right? September 15th. That was that drone attack low. We blew right through it. And I would imagine that 54, 58 area, if these buyers can keep this party rolling, I would imagine that's going to be their big objective here, along with that pendulum swing as we go higher. But that's wishful thinking right now, right? I mean, that's very much a pipe dream right now to go all the way back up to the pendulum swing, right? Markets, of course, got beat up this week. A lot of concerns about recession. Recession means lower demand, right, for this fuel source. And, of course, that's what led to this market collapsing right, much lower here. So we know it's a range. We know we're expecting this market to end up back inside that range. And you can see we kind of dipped our toe back in that range already here this morning. So I definitely know we're looking for that rally back up to retest that pendulum swing, get back up above that trading range. And so because of that, I'm looking for a level of support to structure my buy. I'm marking up these highs. I'm bringing it down to that low. And I'm ultimately now looking for a chance to be a buyer, right, off of the low, or at least buying on a deep pullback right now. I don't want to trade inside the range. I want to buy underneath the range, and then possibly later on tomorrow, we can sell back off the top of that range back down into it again. But for now, though, the market is way too bullish. So let's get serious here on finding a way in, right, on this trade long here right now. Again, most important thing right now is the trading range. I don't want to trade inside this range up here. I want to be a buyer, and I want to buy at support. So I've marked up these highs. I've marked up that low. I know where I've got key levels of support here. I know I've got key levels of support here. So let's think about, right, if we can get either a shallow pullback or a deep pullback, that would really be ideal here for us on the oil. One very simple pattern I always look for is a pullback to the low of a channel. Right? Love this hidden channel. You'll notice again, I'm drawing this channel a little bit like a hidden channel here, right? Off the highs, bringing it down to that low, finding that level of support. Now, once we get down to the low of that channel, at that point now, sellers will try to sell off that moving average now, right? Just like we saw back here, right? Price goes down, bears try to sell off the moving average, right? When they fail, buyers are waiting to buy it back up. Same thing, right? As we go lower here, anticipate those sellers now coming in and trying to sell this thing back down to retest those lows. Hopefully they will. The market's way too bullish right now to be a seller. And so if we see sellers trying to sell off that pullback, I'm going to look for one of my favorite patterns. It'll be a seller failure into a buyer pullback combination setup. That is a seller failure into a bull pullback or a breakout pullback, right, before we get back up to retest the high. Where's our targets? Targets are back up to the high of that range at 67. And obviously, right, target up at the top of the move from this morning. And then we've got that big pendulum swing, right, all the way back up. Right, was it again up there at, right, at 54.13. That will be quite, again, like I said earlier, quite a lot to chew on there, right? That's a lot to swallow up there at 54.13. So we're probably not going to see it that easily all the way to the pendulum swing. But right now, though, I want to get down to the low of that channel, see those sellers try to sell off the pullback, right? Buy into their failure, buy the pullback before we get back up into that trading range. Now, what if I'm wrong, or what if we get a steeper pullback here, right? I've got this great buy zone waiting down here. What if we get a much deeper pullback way down into that battle zone? If we get a deep pullback, it'll probably look like one of these two patterns. It'll either be a two-legged pullback, draw the trend line over, use that trend line as a level of support, right? We call these a two-legged pullback or a 2LP, if you will, right? A two-legged pullback pattern. Most important thing is if it does go one leg pullback, two legs, right? Now it's a two-legged pullback, get up above the trend line and use that as a key level of support. Or if we do see a strong move down again, right, down into that battle zone, now this momentum will be quite strong there for those bears, right? And now I'm looking for a slightly different variation of that failure pattern. We'll look for what we call a nested failure, right? One try for the bears, two try for the bears, and then up from there, right? This is a slightly different variation of the original failure pattern we talked about earlier. The most important thing, though, is if we get a really deep pullback here, I'm not going to want to just try to buy into that failure, right? So again, if we get a relatively shallow pullback down to the low of that channel, sellers will likely come in. We'll try to buy into that failure, buy that pullback back up to retest the highs, right? If we get a much deeper pullback, watch out for that two-legged pullback, draw that trend line up and over and we go. Or if it shoots lower, respect that momentum. Let those bears try once. Let them try twice. Once I've got now the 2-try rule in play, now I know where their stops are, and I can buy right into those stops. You could also look at this as a failure into pullback combination, and you can look for that rally again, going back up to retest the high. So failure, it's a slightly different variation of that failure pattern because of the strength of that pullback. Now, what if we pull back? When do we know it's time to sell? At what point could we sell this market if it runs lower? We've got to flip the momentum now. Momentum is way too bullish here to be a seller unless we see the 1, 2, 3 reversal, right? 1, 2, 3 reversal. Strong pullback lower, right? Strong move lower, pull back to the moving average, and then jump off that moving average. Right? That's going to be the key now that you now have the bears back in control. We're going to mark up that low. We're going to mark that low. We'll mark that high now. Now we know where our sweet spot is, and now we can sell off the top of that new channel. Remember, don't make that mistake and try to sell that first pullback here because again, it's not a bear market yet. Right? It was earlier today, but not after that big rally back higher. If you sell that pullback, right, so that first pullback, a lot of sellers will likely lose money that way. You've got to wait now for that 1, 2, and 3. Get that momentum now to jump off that moving average, mark up that low, mark up that high, and then again now, right, we'll sell off the top of that channel. Where's my target? Right back down to retest those lows. Now remember, tomorrow morning, 8:30 news is scheduled, but we also have those biofuels announcement from the White House, and we don't exactly know when that will be coming out. So we'll definitely be keeping our eyes open tomorrow, right, in the trade room. Now, as we go higher here, what is a good plan for the market going higher? As we go higher, can we buy this thing as it goes? We can. We got a big old pendulum swing waiting overhead here, right? How do we buy it as it goes? There's 2 buy patterns that you want to think about here as we go higher. One of them is the most conservative. It's the 1, 2, 3 breakout. Mark that high, mark that low, and we're buying that pullback on the rush as this thing goes higher. Okay, what's the second one? Second pattern is going to be a strong move up, and because we're going to be up above that range, what I'm looking for here is a 1 try for the bears, 2 try for the bears, a trap low, and go from there. Let those bears try once, let them try twice. What's really going on here is the first pullback is usually buyers taking profit. The second pullback are the sellers actually getting in on that trade. I'm looking for a trap pattern, right? That'll trap low below that 1 try, 2 try, and that rally going back up to, back up to that pendulum swing, right, as we go. Now, could I sell this thing as we go higher? Absolutely, but we need to respect the bullish momentum. If we run higher here now, that momentum will be very, very bullish. So the pattern you want to use is called a crown reversal. Buyers will try once and not retest the high. Buyers will try twice with a crown reversal, a trap high for a sell back down again. Now again, the reason why you've got to be a little bit more careful on the sell side for this is because this momentum is so darn strong, right? So if we do keep running higher here, you're going to want to make sure that you sell after those buyers try once and try twice. So far, guys, we've covered a lot here so far, right? We talked about the buy patterns, the shallow pullback, the deep pullback, right? The strong move going higher, right? The 2 try breakout pattern and the 1, 2, 3 breakout. Even talked about this crown reversal, right? To sell back down in. Just remember, stay away from that trading range, right? Stay away from that range. If we sit here going sideways inside that trading range, I want to focus on buying low, let those bears take it lower, get those sellers to try to sell the pullback, and we'll keep trying to be a buyer now right, into those stop losses, running back up into that trading range. Now, guys, I want to keep going here tonight because a lot to cover. I got the E-minis to talk about next. Before we jump into the E-mini chart, though, I want to remind you, you can learn the entire trading strategy, all 4 of my favorite entry patterns, get a much deeper dive into everything we're talking about in tonight's video newsletter by taking our free trading class in the upper right-hand corner. You'll see that button pop up there in the upper right-hand corner. Grab that button in the upper right-hand corner. Everything's linked up in the description of this YouTube video. I'll also put a big red button if you're on the blog right now at Sideways Markets. I'll put a big red button there below the video tonight if you want to do that as well. But no matter which option you choose, either in the description or the link in the upper right-hand corner or the big red button below the video tonight on the trading blog, make sure you register for our free trading course. That way you can see hundreds of examples of all of these patterns that I'm talking about here tonight. Failures, nested failures, crown reversals, 2-try breakouts. You'll love the free course. I loved making it for you guys, so definitely check that out here. In the meantime, we're going to keep moving forward here. Over to the S&P now. S&P, a lot like oil, is all about a range right now. The range, of course, is smack right in the middle of this chart. We are very, very bullish. As you can see, we are 1, 2, and almost 3 legs higher here, right? Almost 3 legs higher. So we know we've got some resistance areas overhead because after all, the amount of the move below the range is oftentimes the amount of the move above the range. So oil, right? Oil can only dream about getting their pendulum swing, right, for tomorrow. Meanwhile, these buyers on the S&P 500, they're only a couple inches away from getting that pendulum up at 29.20. So what do we know right now? We know we're bullish, but we know we're running out of open space up here before we might end up collapsing back down into that trading range. What's the plan for a bull market? Buy at support. I want to go out and find some key support levels. I've marked up my support level there at 97 3/4. I've marked up my support trend line overhead. I brought it down below, and now we get a great little spot down there to be a buyer here, right, on this S&P. I want to look for that pullback. If we don't get that pullback, I've got to be really careful, right, up here as we go higher, right, into that E-mini S&P. And then obviously, too, I have to be aware we may see a chance to sell this thing back down into that range. But as of right now, the strength of that move going higher is just far too strong to even consider being a seller in this market right now. So a lot like oil, right, I'd like to get a pullback down to the low of that channel. I'd like to see these sellers foolishly now try to sell that pullback. I can buy into those stop losses. I can buy that pullback. And again, the target on this is back up to retest that high, right? Again, it's a failure pattern into a pullback pattern and then back up to retest. You can see a really good example of that pattern right here. This is obviously a very slow time frame. We'll use a much faster time frame to signal the entries on this in the trade room. But the most important thing is, right, same thing, right? Strong move up. We go below the moving average. The bears now try to sell off the moving average. We know it's not a bear market. We know the odds aren't very good for those sellers. So we choose instead to sell the pullback. We buy into the pullback failure, right? And then grab that, right? Grab that breakout pullback for a rally going back up to retest the high. So it doesn't take a very vivid memory to look left and see that same pattern sequence setting up earlier today. We'll see if we'll get something similar, right, for us tomorrow. Now, don't forget, right, don't forget also, too, if this market keeps going higher here, I've got all of that resistance overhead. So what if we don't get that pullback on the S&P, right? If we don't get that pullback on the E-mini S&P, what do we need here to see a breakout of this range? Those two patterns, right? The first one is called a 1, 2, 3 breakout. Mark up that high, mark up that low, and we're buying that pullback right off the low of that channel. Again, I called it a 1, 2, 3 breakout. In this case, it's a break above the pendulum swing, confirming that we have more to go, right? Where's my target up there, by the way? Where do you think those buyers are trying to go if we do get that breakout? They're probably trying to make up some lost time here from earlier on this week, right? I would imagine the easy target for those buyers, up around that 29.50 area, right? 29.49. Tomorrow's a Friday. I doubt we're going to go all the way back up to retest that 29.30, but it's potential, right? By the time we get back next week here, we may see this market really rallying higher. Now, again, right, it is very much a pipe dream right now, right? I'm definitely not trying to call a retest of that 29.50. What I am saying, though, is if we can get a pullback, I'll look for that failure, right? If we can get a pullback, I'll look for that failure into pullback combination, right? If we get that rally higher, right? It's that, again, 1, 2, 3 breakout, mark the high, mark the low. We're buying the low of that channel, right? Going back up to yesterday's high. Or don't forget, right? Don't forget that 2-try breakout, that strong move up. Again, because you've got resistance here, you're going to want to see 1 try for the bears, 2 try for the bears, and you're buying now with that trap low. Just remember, when it comes to this 2-try breakout pattern, the first pullback is really just profit taking. The second pullback is the actual bears getting in. You want that trap low. Maybe we can use the measured move as support. Maybe not. It doesn't really matter. But as long as we see that strong push through the highs, bears try once, bears try twice, that'll be enough for us now, right, to justify that buy. And again, trying to go back up, right, and retest those highs from yesterday morning. Now, what if the market goes sideways up here? Very, very possible that we see this market start going sideways, right? If we do see it go sideways, just like we talked about on oil, right? If oil gets stuck inside of its range tomorrow, anytime we have a trading range on the chart, I want to buy low, I want to sell high, and I want to focus on failures. So let the market try to go lower. It's a bull market overall, obviously, right? So let it go lower. Let those sellers now, let them try to sell off the pullback. And once those sellers commit off the moving average, now we know, right? Again, not a bear market. It's not even a trending market at that time. Very low odds of success with a breakout pullback pattern. I know that breakout pullback patterns are very, very easy to learn. They're very popular among rookie traders. I was a rookie for a couple of years as well. I used to use these patterns all the time as well, and they usually do fail. One thing I love about ranges is look for that breakout pullback and simply just, again, range-bound market says buy low, sell high, avoid the middle, buy it as it goes back up into that trading range using that seller failure pattern. Now, how do we sell this market? There is no guarantee that we get that pendulum swing. The pendulum swing is a rough guesstimate, right? It's not, I wouldn't say a guesstimate, but it's a general area. This whole area up here is going to be considered a major resistance zone, a major target zone, right, for those sellers, or for those buyers, I should say. So there's no guarantee here right now that we are going to keep going higher. What would a sell look like? Well, obviously, the easier sell would be a 1, 2, 3 reversal. Mark up that low, mark up that high, and sell off that channel high. That would be the most dependable sell, right? Get that market to turn directions, right? 1, 2, 3. Once we get that momentum running, then I can sell this thing back down into that trading range. What other pattern could I use, though? That crown reversal pattern. Because we're so bullish right now, you want to let these buyers, right? Let them try once, let them try twice, trap high, right? And then sell back down. The reason why you want that trap is because the buyers need to be respected, right? The buyers have momentum on their side right now, and you simply don't want to get in a habit, right, of trying to aggressively sell into what could be a level of support down here, into what really is an area for buyers to want to buy that pullback. So wait for those buyers to try once, right? Wait and try twice. And notice how I draw this, right? It's a lower low and a higher high here. This is a very specific pattern, right? It's a very, very specific pattern here. Much, much different, right, than if we do pull back, let those sellers now come in and sell off the moving average, right, and buying it up from there. What we see in the reversal pattern is the buyers try once, the buyers try twice. We get those buyers trying to push it higher here and looking for that trap pattern back down into that trading range. So now we get a pretty good plan here of attack, right? We want to We want to try to sell this market only with the right patterns here because, again, we're so bullish right now. I'd like to be a buyer off this pullback, or if the market keeps going higher, resist the temptation, right, to buy into that overhead resistance. And keep your eyes open tomorrow, guys and gals, for that trading range, right? We may get stuck in the mud up here in a range. If that's the case, 1, try for the bears, 2, try for the bears. Literally buying into a failed breakout pullback pattern below that trading range. And again, guys, don't forget, if we do end up for some reason back into that range, very, very possible tomorrow morning with that big news at 8:30, if we do end up back into that range, it'll be a bear momentum at that point. Range bound market says buy low, sell high. I want to sell high, right? But if we end up back inside that range here, you want to sell, wait for the market to pop higher, wait for those buyers now to try to come in and buy that pullback. And again, we'll sell, right, into that pullback failure, right? Wait for that breakout pullback, sell above the top of that trading range. And again, I'm covering a lot of information in a very short period of time. If you haven't taken that free trading class yet, grab that free class in the upper right-hand corner. That way you and I can get the most out of our time together every evening on this video newsletter. You'll know all the patterns, you'll know all the terminology, you'll learn the same strategy that we use every morning in our trade room. Let's keep going here. How about some Nasdaq? Nasdaq is very similar, but you'll notice the Nasdaq is right up into that pendulum swing right now. Most important clue in this chart right now is that trading range. Ranges tell us to buy low, sell high, avoid the middle. Buy low, sell high, avoid the middle. But in this particular example, look at the strength of that move going higher. I realize we are definitely above the range and we should be looking to sell on this thing right now. But do you want to sell that thing? I don't want to sell that big rally higher. Way too strong to even consider being a seller right now. What I'd like to do is try to catch some sellers trying to force this thing back down and use those sellers' stop losses to fuel my profit targets here tomorrow. Most important thing right now is we've got that pendulum swing, right? Below and above, we've got our measured move 1, 2, and 3. So this whole area up here is really going to be tight, right? It's tight area up here for those bulls to be buying. I would imagine a lot of buyers right now are probably looking forward to taking profit. We know the buyers right now, just like the S&P, are going to try to get their right back to that 77.31. That's yesterday's high of day. The sellers, of course, they want to go back down to retest that low. If we do end up back inside that range, remember, stay out of the middle, right, of that trading range. So again, we know right now the market is very, very bullish, right? Lots of strength as we go higher. You could even say that this is a range up here. I don't quite think it's a range yet, but that may end up, right? We may end up going sideways here, right, inside of a range. If we do end up chopping around here inside that range, it's a bull market into that range. What do we do with a bull market into a range? We look to buy underneath that low. What pattern do we use? A failure pattern, right? Let the bears take this thing lower. Let them try to sell that breakout pullback, buy into their stop losses for that rally, right? For that rally back higher here. That's one pattern we are definitely looking for here tomorrow. Keep your eyes open for a possible range. I'm also got my eyes on this trend line coming down, right? Mark that trend line, mark that hidden channel. I love this whole area down here. You got that reversal line at 19.25. This is a great spot here right now to be a buyer. And really, it's very similar to the rest of these charts tonight. I'd like to see us pull back, get down into an area of support. We're not a bear market, right? We're not ready yet to be a seller. We might eventually, but we're not there yet to be a seller. I'm looking for these bears to try to sell short off the moving average. And if we can get lucky, we'll get that combination, right? That failure into that pullback. And where's my target? My target, of course, now is a retest of that high. It's a failure pattern into a pullback pattern, right, and a retest of that high. Now, also don't forget, right, if we do get that run lower, we can go back into that range, but you've got to get that strong move lower first, though, right? You got to get that 1, 2, 3, that move lower off the moving average. that will give you the confidence now to be a seller, knowing the bears have momentum back now. Find that new hidden channel. I draw the channel off the lows here. We'll pop it up now, up at those highs. I'll mark up that prior low right there. That creates my sweet spot. And we're looking at a sell right off the top of that channel. The only condition is make sure that sell is not inside the range, right? That's why I always say range-bound market. That's the most important factor here right now on the Nasdaq. Buy low, sell high, and avoid that middle. Avoid that middle. Now, if we do just run lower here and go back into that range, well now, right, it's a bear market. We're back into the range. What do we do with the range? Buy low, sell high, avoid the middle. We're bearish in this sense now. You want to sell up around those highs. How do you sell it? Breakout, pullback, failure, right? Most breakouts will fail. The only thing that rookies like more than breakout trades are breakout pullbacks. Most of them will fail in liquid markets. I want to see us go up. At this point, momentum has turned. I want to see buyers now try to buy that pullback. Again, getting up above that range. Buyers try to buy the pullback, and now we can sell it right back down into that trading range. And again, I've got hundreds of examples of these failure patterns as part of that free trading class that I mentioned earlier. So don't delay on that one. Grab that free course. You will not be disappointed here. And so that's the idea. If this market goes lower, how about a reversal pattern? Reversal pattern, right? One try for the bulls, two try for the bulls, trap and go. Right? Trap and go. Let the buyers now try once. The buyers will try twice. And again, we'll watch this stuff in real time in the trade room tomorrow morning. Right? That's your crown reversal pattern. Right? That's your crown reversal pattern there. As we get that trap high there, that would be your sell. But right now, though, I'm looking to be a buyer here, right, on that next pullback to finish off that measured move, right, down below that moving average. Get those bears now to try to sell off of the EMA, right, failure into pullback as we go. Now, what if the market jumps higher, right? What if we jump higher here? Where are we trying to go? We're trying to go up to that 77.31, right? Yeah, yesterday's high. 77.31 is the objective. Two options, right? Two options. First option is a 1, 2, 3 breakout. Remember, be very careful buying that first pullback. Oftentimes, we'll see that first pullback fail because you're up at such a high price on this chart. I'll wait to hold that pullback, mark up that high, mark up that low, find that sweet spot, right? And we're buying the low of that, right, of that hidden channel. Makes sense, right? Don't just buy high, right? Markets are not going to keep on going higher forever. It's a game of musical chairs when you try buying high, and you'll usually be the one left without the chair when the music stops, right? So don't buy high. Wait for that follow through, right, and buy that again. 1, 2, 3 breakout into hidden channel pullback, right? 1, 2, 3 breakout into hidden channel pullback, or it's that 2 try breakout. Strong move up, very strong, right? Got to be a real strong move up. 1 try for the bears, 2 try for the bears. Now, because we have room to go overhead, you don't necessarily need a trap low on this, right? Unlike other markets where we have those levels of resistance to worry about overhead, you don't need a trap low. A trap would make my day, let's be honest, right? A trap low on this would really make, it would make it almost a guaranteed winner on that. You don't need a trap low. It wouldn't be bad at all, that's for sure. But we definitely need to see those buyers, right, take their profit, then have sellers come in and try to sell it, right? And once we see those bears, right, getting out once, getting out twice, now they can look for the buy now to finish off that move up at that 73.30 area or 77.30 area as we go. Now, if we do see it really jump higher here, well, then you're going to want that trap, right? 1 try, 2 try, trap low, right? If we're knocking right on the door up here, right, that makes sense, right? You can take a strong move up, 1 try, 2 try, and buy here because you got plenty of space up there, right? But if we really jump 1 and 2, yeah, now I'm going to have to get that trap low, and that trap low, right, will make it much easier for me to be confident that other traders will be participating with me on that trade as well. So that's the idea as we go higher, right? Know where you're going, know where the target is, and prep the right pattern so you're not buying right into that level of resistance. So now we've talked about, right, if it goes sideways tomorrow, right, watch out for that sideways range, right? We talk about how to sell this market. We've talked about how to buy this market. We know where the buyers want to go. We know where the bears want to go, right? Let's wrap up here tonight now on that yellow metal, right, over on the gold. What do we know about on the gold tonight? We know the gold is bullish, right? We've got one leg, two legs, three legs. You'll notice they haven't got that third measured move yet. That is business left unfinished at that 1530 area overhead. What else do we know? We also know the buyers here went up. They tried once, they tried twice, and we are looking now for a potential crown reversal pattern up inside that battle zone, right? A very, very big clue. You're wondering what a potential reversal looks like. We're seeing something similar to that pattern right now here on the gold. What else do we know right now? We know the day ended yesterday and finished today inside of a range. What do ranges tell us to do? Ranges tell us to buy low, sell high, okay, and then, of course, avoid the middle. So again, I want to be a seller up inside that battle zone off this crown reversal. I want to avoid the chop and slop inside that range, and if we can get through it, I want to be a buyer underneath that range tomorrow morning. Now, like I mentioned in the introduction here this afternoon, right, a lot of it has to do with how we get down to those lows. Right? In other words, do we just smoke right through those lows and right down to the lows again? That's going to be a very bear market at that point. Or do we sit inside this range for a while and then make a move lower? That really is going to be the most important factor, right, in our decision. So first of all, how do we sell this market back down into that range? Well, remember, who has momentum right now? Look at the chart right now, and you can easily see that big blast higher. Right? Now that big blast higher gave the buyers control. Now the sellers have to take control. How do you take control of a bull market? You've got to rip that control out of the hands of these buyers. And to do that, you want to see a jump off the moving average. Right? Anytime a market turns direction, you'll see the market almost out of celebration, right? It jumps off the moving average. For example, if you look back in time here, right, it was a bear market, right? Bear market, bear market, bear market. See how they keep jumping off the moving average there? The sellers are coming in and just whacking it, right, every time it pulls back to the moving average. Well, then look what happens, right? Then right here, the buyers, right, it's almost like a victory, right? They jump off the moving average. Now, you might say, well, that's a short covering rally, whatever it is, right? Those are sellers getting out of their positions. The bears are done. Right? And once you get those bears done now, right, now all you have to do is, right, find that new hidden channel, mark up off that low, and buy the low of that channel. Okay? Bottom line is, most important thing is, when the bears are jumping off the moving average, they have control. When the buyers are jumping off the moving average, they've got control. If the buyers have control, right? If the buyers have control of this market right now, because obviously, look at that move up. It's impossible to tell me the sellers have control of this market right now. The buyers have control of this market. Now, you tell me, have the sellers, have they jumped off this moving average yet? No, they haven't. In fact, you could easily say they are stuck right around that moving average. So on that, right, in that sense, this is still a bull market, right? Still very much a bull market. So knowing that, we have to look at this now as a reversal pattern or a trend reversal setup. I always want to make sure before I go trying to sell this market, wait for the buyers to try once, wait for them now to try twice, and you'll notice they keep kind of grinding lower here right now. What I need some sort of trap level above that 17.7. Now, what I'm anticipating is, this market now will go up, try to get these buyers to come in and buy that pullback, and I'm looking for a sell right into those stops, right? Buyer failure, into a seller pullback, and then back down into that range. I can easily anticipate right now, I'll bet you're going to have a lot of buyers that will try to buy that pullback once we go higher. right? The problem is, at this point now, the buyers have tried once, they've tried twice now. There will be a lot of sellers trying to pick that top up here. I don't quite trust the reversal yet because we are still trying to get that measured move, right? We haven't, of course, finished off the measured move yet. What I will do, though, is I'll wait here to see if we can get these buyers now, try to buy that pullback off the moving average, and if they fail, I can sell into those stops, grab the moving average as it comes over, and sell back down into that trading range. The most important thing right now is we know the market will probably want to go back into that range tomorrow, especially ahead of that news tomorrow at 8:30 Eastern time. Again, gold is notorious for being a very choppy market around those non-farm numbers, so be careful overnight. But if we can get some clear price action here overnight, I'd like to get that crown reversal, but more importantly, a failure into a pullback combination back down into that trading range. Now, what if we don't fail, right? What if these buyers, what if they grab it, right, and they run this thing higher? If they do, at that point now, I'm going to mark up, that high, find my channel, and we're buying on the way up to that measured move overhead, right? The most important thing will be, though, on this is do not try to buy into that high. Make sure you buy that pullback. And again, you're going to want to see it reclaim its momentum here right now. Buyers will buy off that pullback, nice strong jump up, mark up that swing, and we're buying off the low of that channel, tomorrow morning before we get up to that measured move, The measured move is the big objective right now, for those bears. Now, if we can get through that measured move, where's our next level? 1543.5, So this thing really gets cooking tomorrow. 1543.5 tomorrow, That would be, again, you've got really two options as we go higher here, One is a 1, 2, 3 breakout, mark up that high, mark up that low, buying off the low of that hidden channel. The other one's going to be that 2-try breakout, that strong move up, 1 try for the bulls. Because we are so high, I do want that trap low, That trap low, below that low. Bears try once, bears try twice. Profit taking is the first one. Short sellers are the second one, If we do get that very strong move higher, though, we should be able to count on that trap low, So now we know how we want to sell it. We know now how we want to buy it. Don't forget, if we do end up back down into that range, If we do end up back in that range, this market now will be back to being bearish. We know bear markets tell us, range-bound markets, buy low, sell high. I want to sell high with that breakout, pullback, failure pattern, and back down, 2-try rule, breakout, failure. Let those buyers that are running up, let them try to buy that pullback, and we'll sell into their failure, going back down into that trading range. Now, this is the more challenging part of this now, is do we just roll lower? I've got this trend line waiting down here. I love that trend line area there. Do we just roll lower, or do we go back into the range? Because if we go into the range, that's going to absorb a lot of that short-term momentum, and I can buy, remember, a range-bound market, you want to buy low, so at that point, momentum will not be that big of a deal. If we can get the market to go lower now, again, this is after we spend some time inside that range, what I can do is I can buy underneath that low using a standard, a standard seller failure pattern off the low of that trading range. However, if it just runs lower, if it just collapses and runs lower, we still have that trading range to go back into, But now we've got to respect that momentum. Now we'll look for, just like on the oil to start the session off this afternoon, 1 try, 2 try, and we'll buy back up from there. We call this a nested variation of that 2-try rule, It's a slightly different type of pattern, very similar, But now because of that momentum being so strong, now I want to let the bears try once, let them try twice. Then we know they're all committed. Then we know if the sellers fail, we'll get that snap back, going back up into that range. So really at this point, it's really coming down to, do we go back into the range and chop around sideways? Again, that tells us now we're balanced once again. If we run lower, I can be relatively aggressive here now with a straight seller failure pattern and buy underneath that range. Or if we collapse going lower, respect that momentum. Let the bears try once, let them try twice, right? Once we get the 1 and the 2 try, now we know where all the stops are and we can buy it going right back up into that trading range. And who knows, right? Maybe this turns into a breakout. Maybe we go down to that range and then 1, 2, 3 break down, mark the low, mark the high, right? We're selling off that high, right? And to finish off that pendulum swing down to that 1488. Remember, when a market's in a range, buy low, sell high, fade those breakouts, right? You got to think most breakouts in range-bound markets are going to fail unless you see that 1, 2, 3 breakout, right? 1, 2, 3. Don't just try to fade. Don't just try to trade those breakouts. Most breakouts in liquid markets, just like gold, will be a failure. And again, guys, as I mentioned earlier, if you're here for the first time today, if you haven't grabbed that free course yet, upper right-hand corner, grab the free trading class. That way you can learn all my favorite setups. You'll learn my 3-step strategy, right? And don't forget, guys, tomorrow morning, we'll do it all together with all of our clients at the opening bell at 8 o'clock Eastern time. So don't forget, come out and join me tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern time. If you're on YouTube right now, I'll put all the links in the description of that YouTube video. So dig into those links in the description of the YouTube video. If you're on the blog right now, there's a big blue button right below the video tonight on the trading blog, or go to the website here at schooloftrade.com and grab that advanced course. There's a video there for you guys to check out that'll go over all the details of what's included, right, how to get started. But whatever you do, though, you better act fast because tomorrow morning's opening bell is only a few hours away from right now. So grab the advanced course. Again, all the links in the description of the YouTube video, or scroll down on the blog, big blue button right below the video tonight, right, and grab that link to get started. Don't forget, if you have any questions at all, don't be afraid to call that toll-free phone number right on the left-hand side. And then, as always, right under my ugly mug, you'll see that spot for the live support tool. Use that live support tool. I'm always here to answer all your questions and help you get the information you need. So you'll have a great day along with us tomorrow morning in our trade room. Guys and gals, thank you so much for your patience this week. Believe me, I would have much rather have been here with you every evening this week here. I'm trying to protect my voice here right now. It seems to be holding up pretty well here. I just got steamrolled by that sinus cold here earlier this week. But hey, we're back in the action tonight. Back to what we'll schedule for next week. We'll see you guys tomorrow morning, 8 o'clock Eastern time. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.